Hi there, Stanton here from Algotrading. Today I'm introducing to you the EUR USD swing breakout trader. Essentially it looks for highs and lows for a given period and a given number of candles. It then looks for rejection at these points and places trades at the potential pivot point. The strategy can also be reversed to become a channel breakout strategy. But before going into the strategy, the algorithm can be bought from my website algotrading.co.za, which can be accessed by clicking the Algotrading store link at the top of the YouTube channel. Upon purchasing the product, you'll receive full source code, all set files, as you can see here, all sets files, reports, and also you will receive access to my Telegram account where we could discuss strategies, code, and other trading issues. Okay, so let's go into the algorithm. Looking at the inputs, you can see we've got the first input is trade comment and the magic number. And also if you want to print out the logs or any sort of errors, you turn this to true. The channel time frame is the time frame it looks to see which highs and lows for that time frame. Then the number of bars, so it looks at the channel time frame and the number of bars to determine the highs and lows. The distance above and below the channel to place order in pips is we place pending orders as well, and this determines how far away from the actual trade to place the pending order. You could specify the max number of buy positions, max number of sell positions, and the shift counts back from the current candle and starts at this point to the number of bars in the channel. The pullback size is the candle after the channel is broken out. This is the size of the candle in pips that it must be reached before the trade is placed. And this year you could place extra pending orders. So if you turn this to false, no pending orders will be placed. If it's true, pending orders will be placed. And here you could reverse your buy trades and reverse your sell trades. So for instance, in a downward market, you could reverse your buy trades, then they will then become sell trades, so then you'll only have sell trades. Or if you're in an uptrend market, you can reverse your sell trades to buy trades, and then when it breaks out the higher portion, it will buy, and if it breaks below the lower portion, it will buy as well. The money management, the stop loss, take profit, you could choose whether you want to use a trailing stop or not. So the trailing stop step, and then this is your risk. How much of your free margin you're willing to risk. The trading time, so you can specify which days you want to trade and which hours you want to trade. Now I'm going to run this using the default settings. Just check on the 1 hour chart. You can start. So as you can see, as it breaks out the previous highs, places the sell orders, and you can see the trailing stop is following it. It will keep going until it hits the trailing stop. Now you can see it broke the previous low. Then it's going up. Broke the previous low again. And you can see as the conditions are met again, it keeps placing pending orders. So that's why you can see the number of trades. But you could turn that off to only have one trade if you want, or you could have it more riskier and have multiple trades like it's running now. Also, I recommend keeping a type stop loss due to the fact that the trade can go the other way and you'd like to get out early. And this is a longer term trading strategy, so the stop losses are the take profits are quite long, and the trailing stop is quite high, just so that it trades for longer period of times and takes maximum profits. This strategy is very good for trending markets, or there we go, just place another trade. We'll probably place about 1 or 2 trades a week and hold on for at least 2 to 3 days. Like I said, it's very good for ranging markets. As you can see, when it hits the previous lows and the previous highs, the market seems to reverse back. You can see it's reached its previous lows, and you can see it bought in there and it keeps going back down. So that's why I'd recommend putting your stop loss quite tight for this trading strategy. For trending markets, I'd recommend using your breakout instead of the reversal. But for ranging markets, this is an excellent strategy. It should be coming to the end now. I just ran it for the last year. I mean, you could have it run with less trades, so you could choose your level of risk that you're willing to risk. If you want less trades, if you want trade, if you don't want pending orders, you could configure it. This algorithm is highly configurable to suit your trading style. And also you could see it acts sort of as a hedge. If by keeping the trade open for longer, it's already into the buy trades. And there we go, there it's finished. So there you can see there it's 850% from the beginning of this year. So fairly profitable strategy. So once again, hope you enjoyed that video. Remember that you could purchase this strategy from my website by accessing this link, and hope to see you again soon. Thank you. Goodbye.